What's up, replayers? What's up, guys? Rockborg, what's up? We had an awesome day today. We had some good plays today, let me tell you. Good evening, April. How are you? Thank you for the invitations. Guys, we had some great plays today. Today was a big day. And just as I got off of the last scope with you guys at around 1-ish, we've been down. Prime has been, Philanthropist, what's up? Prime has been short since that period. What's up? We took quite a pip or few out of the market today. Quite a pip or two out of the market today. So what's up, guys? Wow. 3 people in the room? Seriously? Seriously? Printing money doesn't excite people? Printing money? I'm just like, okay, I don't know. What are all these people doing on Periscope? I thought a lot of people were on here. Right? I mean, I thought a lot of people were on Periscope to get strategy and to help themselves out. I guess people are just listening to random talk on Periscope now. Maybe that's what it is. Yes, Philanthropist. In development, though, I will let you know. I have a landing page in development, so as soon as that's finished, and it's going to be finished this week, I will let you guys know. Wow, guys, four people? Seriously? Seriously? Clovieras, what's up? So how you guys doing today? Everybody tell me, did you play anything in the market today? Today we had awesome volatility. Awesome. The volatility was awesome. And let me tell you, we had our way with the market today. We had our way with the market today, guys. We started with this massive short. Awesome. We started with a massive short. We had some chop. We took all of that. We took this upside. We took the downside. Then right here we got long. We took this all the way up. It retraced on us very quickly, and then it came up again. So we had 2 opportunities to take 20 pips on each of those candles. We ended the day up 120 pips, called it a day. And as you can see, we could have actually shorted the market here and kept taking pips. We could have. Thanks, bro. Thanks. Not me. It's the algorithm. I mean, it is me. I coded the algorithm, but I wouldn't be able to do the statistical analysis to take these positions as a discretionary trader. That would not be happening, you know. So how you guys doing tonight? No losses? Does that mean you won? We're kind of flat for the day. What's up? Any other methods? Well, I have a bunch of algorithms, actually. But Prime is the primary algorithm that I use. I appreciate those hearts, guys. Those hearts make me feel good, man. They make me feel good. Prime is my primary, not to be a pun, but it's the primary algorithm that I use. And, I don't know. Took 2 pips. Went flat. Took 8. Alright, yeah, little scalps. Nothing wrong with that. So I'm just gonna try and wait for a few more people to get into the room. We're gonna chat 2 positions. Awesome, awesome. Are you guys getting my notifications okay? Yeah, okay. Awesome, awesome. Let's see if we can get some peoples in the room. You're having difficulties with the connection? Yeah, you know, Periscope, I think for a while, Periscope has been having difficulties with the connection. I'm going to get my trusty tripod out here. And I think that's why a lot of people have stopped watching Periscope, unfortunately, because there's just been too many issues with connecting. Fortunately for myself, yeah, guys, that's a good thing that you guys can do. Unfollow and then follow me again if you're not getting the connection. Thank you for that tip, philanthropist. I get a great connection, but it's only because I'm right in my home, and I have a, you know, like a T1 connection or something. Yeah, Clovieras, do that. Just unfollow and follow real quick, and see if that helps out. So, what are we talking about tonight, guys? Well, tomorrow we've got the big boy. We've got the Fed at 2 p.m. I don't know why I keep saying 2 a.m. I'm up so late nowadays. It's just all like meshes. Right, more for the notification than the connection. Yeah, if the notifications, you know, sometimes they update the app. Oh yeah, everybody's trading in London. You see that big candle downward? Boom. You know, it's kind of funny, guys. I see all of these people that talk about wanting to learn Forex and making money. And I know that, you know, my Twitter is growing and I've been getting a lot more follows on my Periscope. Yeah. Oh, man. Last night was crazy because just as I was going to bed, we got a big play. So I'll be going to bed early tonight. I'm going to eat and then go to bed early tonight. And I'm going to wake up early tomorrow morning and see what the market is holding. I'm going to try and get up, you know, 5, 6 a.m. But the crazy thing is that I know, it's just so sad. It's so pitiful. I mean, you know, from the perspective of a trader, you cannot recruit traders. Like, that's like trying to recruit professional football players at a high school. You know what I mean? I mean, if you visit 100 high schools, you may get 2 or 3 people that are capable of being professional football players. It doesn't make sense to have an MLM for trading. It just does not. It just doesn't. Not everybody's going to be a pro basketball player. Not everybody's going to be a pro trader, no matter how much you teach them. Some people don't want to take the stress, man. You know? Bad sleeping habits, the stress. Yeah, I know exactly what company you're talking about. I think it's pitiful, to be honest. I don't see how... I mean... No, it's just the truth. I'm not putting them down. I don't really care who they are. We still have some downside here, guys. So even though we might be slowing up, there's still a little bit a downside. Yeah, the harmonica scanner. Jose and I were just making fun of that yesterday, because these like 14, 15-year-old kids, I give it to them. They're ambitious, but they have no idea how to sell shit. I don't see anybody trading with it. I haven't seen anybody make money with that. Claveras, thank you for the invitation. I haven't seen anybody make it. Because let's face it, if you are actually making money trading, why would you need to have a network marketing? Right? Like, if you make money trading, why would you need network marketing? I mean, we made 120 pips today, and we're still making pips. Yeah, there's a company out there that's trying to do MLM with Forex trading. So, unfortunately, what they don't realize is that all of the people that burn out their accounts are going to go online and start dissing everything they do. And you're going to have an army of people that are pissed off at you. That's essentially what's going to happen, because I don't care if they have, even if the scanner did work, you're going to still have people that just don't listen to it. And I can guarantee you that it doesn't work. Yeah, what are you going to, like, shouldn't you be trading the markets? If you're a trader, you should be trading the markets, right? Not going around trying to recruit people. I mean, we've had a couple 15-year-old kids pop into this room and try to sell me the harmonica scanner. And I was like, I don't need the harmonica scanner. I got enough musical instruments. I have enough musical instruments. I don't need the harmonica scanner. And you know, like, these kids have, like, literally no idea. Like, didn't even research who I was. And so I asked one of the kids, I said, have you made 100 pips any day in the market yet? Have you made 100 pips with it yet? And the kid tried to tell me that he was making 6 figures a month with the harmonica scanner. And I said, well, what are you doing in my room then? You should be making 7 figures if you weren't out recruiting, wasting time. You know what I mean? Very funny indeed. Very funny indeed. And for some reason they think like people are going to believe their bullshit. But those gullible people are all going to be, at some point, have tremendous animosity toward the company. And they're going to take to Yelp and all these other, you know, ratings places, and they're just going to rip the company apart. Yeah? Well, that's surprising. I mean, normally traders would not care about doing something like that. I mean, if you're a good trader, you know, there's no reason to want residual income at all, because it's not going to equal the compounding that you can get through trading itself. It just doesn't make sense to me. Like, yeah, but see, even that stuff doesn't impress me, you know? I mean, in order to make that kind of move, you have to be really trading very large lots. You know, he's trading a million lot, you know, 10 times lots, 10 times his average lot size, or regular lot size. He did a 100K lot and he made 9K? That doesn't make sense. No, I mean, the money amount shouldn't really be blacked out. If you're going to show your account. I mean, if they're telling you, like, if you watch it real time, I don't really think that the money amount, you should be able to actually just, depending on the lot size, you would be able to calculate the amount of money they made. But that 9K, that doesn't sound right, because we traded non-farm payroll and we took literally almost every single pip, and it didn't amount to 9K with a standard lot. Yeah, just well, I can't see your screenshots, unfortunately. So he made 9K on a standard lot. That doesn't sound right. It's only $10 a pip on a standard lot. So he would have to take 900 pips. Oh, so he had multiple positions. Okay. Yeah, see, I don't like those. Are these just screenshots that they showed you? Did you actually see it happen in real time? Like, I don't believe a lot of screenshots because they can be doctored. You know, there's so much that you can do with Photoshop nowadays. And then plus, if it was a demo account, you know, so I'm very cautious with that. I mean, if they're showing the trade as it happens, like, hey, my system or me is going short here, and then, all right, guys, I'm gonna go long here. Yeah, I'm just cautious about that stuff, you know. I work with Photoshop a lot anyway, so, you know, being a graphic designer and doing UI UX design, there's technically nothing I can't design, but you know, you just got to know what's real and what's not. It didn't make sense that that would be one position. He would have had to take 900 pips out of the market with a single position. Yeah, I mean, what's the size of his portfolio? I mean, that's a great return, but is it a great return? Yeah, people like that burn out their accounts. You know, they'll have a few victories and then they'll take screenshots of the victories. But if you're making that much money on one trade and you only have 14K in your account, that means that you basically did the airplane trade. You did an airplane trade. That's not repeatable. You can't repeat an airplane trade. Yeah, it's an airplane trade. You know, you have a 50-50 chance, right? Divided by what? 3 positions? So, right. I mean, if it's repeatable, then you'd be able to do it again. It might be. Yeah. Well, let's look at it logically, right? I mean, If you're a great trader, you're not starting an account with $15,000. Let's face it, if you're a great trader, you're not starting an account with $15,000. You're just not. So that's kind of like one of the indicators right there. Like, I would tell people, if you're starting an account with anything under $25,000, you know, yeah, there's nothing wrong with that. I mean, that's just where you're at right now, you know. But if you're starting an account with anything less than $25,000, you have to consider, you know, I tell people the first thing you need is risk capital. And if people don't have risk capital, then, you know, you're going to need to really focus on taking very small positions and limiting your risk. Thank you, buddy. Thank you. All right, so Prime attempting along here. Yeah, you know, when you oversize your position, I don't know if I told you this, but statistically speaking, if you oversize your position, there is a 100% chance over time that you will lose everything. It's mathematical. It's not debatable. It's a mathematical fact. Once you start betting more than what's called the efficient frontier, in terms of the risk reward for your individual portfolio, that size of your individual portfolio. Okay, so you have your efficient frontier. It's called optimal F. So once you go more than optimal F, there is a 100% chance that your risk size will eventually wipe you out completely. It's a mathematical fact. And so when you see someone with a 14K account making 9K, they went way over optimal F. Those are fibs. Those are fibs, philanthropist. Those are the fibs from Friday. You see how well they're holding from Friday? So Friday we had that volatility. Yeah, the lot size should be basically, you know, there's lots of different ways to calculate it, but if you go in terms of risk, you shouldn't be risking more than about 1% of your account. All right, but that's just a quick and easy way of looking at it because of the leverage, right? So if you're levered up 50 times, 1% is a lot bigger than it sounds. So you got to really watch the downside when it comes to taking out the margin accounts. Otherwise, you're going to go over that optimal F and you're going to lose everything. And that's the difference between a pro trader and a novice trader. And that's how I know that guy is not a pro trader. Because you cannot repeat that trade. You can't repeat it. It's not a repeatable trade. There's no skill there, so it's not worth anything. It doesn't impress me. Yeah, it's you know, the thing is that a lot of people play this Forex game and are lifetime losers and end up refunding their account over and over and over and over. And they're lifetime losers. They've never had a winning year. And that's 95% of all Forex traders. All right, well, we're gonna change that. We're gonna change that. You know, and it's just a fact. And you know, I tell people, Forex is one of those things, and trading in general, it has nothing to do with how bad you want it. I'll be completely honest. It has nothing to do with how bad you want it. You have to stick to certain mathematical truths. Yes, and the learning should be mostly in money management, which nobody preaches. And the second aspect would be in probability and statistics. But probability and statistics is not sexy. It's not as sexy as showing a screenshot with a couple $1,000 or $9,000. Anybody who knows anything about math knows that trade is not repeatable. It's not. Right. Right, because they don't know the math involved. They just see that 9K and they say, wow, you made 9K on a 14K account? I've got 15K that my dad gave me for my bar mitzvah. I bet I can make 10K too. No, you can't. It was a chance occurrence. It was not a repeatable strategy. And when people take those airplane trades, it just hints at the fact that they don't believe that they can actually take repeatable trades out of the market. Because if you believe that you can take repeatable trades out of the market, you know that the compounding is going to add up really quick. You know it. If I could do nothing but take 10 pips 3 times a day out of the market every single day, do the math. 10 pips, so we're taking 30 pips a day out of the market. Do the math on a standard lot. How much is that per month? Okay? So we've got 20 trading days in a month. Let's just do it really quick. 20 trading days in a month. We're taking 30 pips a day, so times 30. That's 600 pips per month. All right? So you're making 600 pips a month. Let's just say in 3 months, if you never ever increase your lot size and you're trading a standard lot, you're taking 600 pips a month times 10, you're making $6,000 a month. So if all you could do is take 30 pips a day out of the market, and shit, we took 100, not to be vulgar, but we took 100 MF and pips out of the market today. Repeatable, because we did the same thing on Friday, and we did nearly the same thing yesterday. We took 80 pips yesterday, so it's not like it's not repeatable. We're repeating well over 50 pips a day. But even if it was just 30, we're talking about making an extra $6,000 a month on a standard size lot. So why not just keep doing that? Why expose yourself to extra risk? And by the way, there are formulas that you could start to employ if you have a winning strategy, if you have an edge, a so-called edge, that would tell you exactly when to start going up the next lot size, right? And that's what I'm going to teach you guys. I'm going to have to do that over a video course, though. I'm going to have to do it over a video course. It's not going to be something, first of all, it's not something that I would give out for free because not a lot of people know this strategy. Second of all, I don't want it to get trolled because it is a strategy that works. But is it commonly known in math circles? Of course. There's not any, hocus pocus that people use to become successful traders. Risk versus reward, money management, repeatable edge, and then compounding. You want as many instances of the repeatable edge as possible. My history with the industry, basically I went into an application and I came second in the world out of 250,000 people trading equities, no leverage, but it was a paper account, $1 million on a paper account. In 1 year, I turned the $1 million into $24 million in 1 year in the paper account. So we absolutely murdered it. Me and my, I had a mentor that was from Singapore. He was actually a finance major in Singapore. And he graduated college at the age of 18 as a finance major in Singapore. He was actually extremely smart. And he was the one that basically taught me quite a lot of things about trading. Things that you wouldn't necessarily find in a book type deal. Probably one of the best moves you'll ever make, bud. You probably won't realize it until you get older, though. I will tell you that. Depending on what your age is, you'll probably neglect the value of that education. for quite a while until probably 26, 25, 26. Once you hit your mid-20s and you start seeing how your other friends are struggling with their majors. Yeah. Yeah, it's going to be math heavy, man. It's going to be math heavy, but it's going to be valuable. And if I could give you one piece of interest, one piece of advice that might get your interest, it would be this. No, it's not necessarily keeping your trade size a constant percentage. It actually has to do with historical. There's a couple added components to it. One of them being your historical win-loss ratio. So it takes probability into consideration, and not just the percentage of your lot size versus your portfolio size. That's kind of a lazy way to do it, but that's not going to give you the optimal growth of your portfolio. And so what we attempt to do as portfolio managers, because you guys will be as a trader, you are your own portfolio manager, all right? So the first thing is you got to start studying portfolio management, okay? That's the first thing. Don't worry about studying trading per se until you have a grasp on portfolio management, because it's going to expose you to some of the money management concepts that are more important than, drawing charts, to be honest. So after you have that, then you need to determine what on every single bet, and on every single bet it will change. You've got to find the optimal size of your bet, and there's a formula for that. Albert, what's up? Guys, thank you for joining the room. You see there's not that much movement tonight. I don't expect, a lot of movement tonight, specifically because we've got, FOMC tomorrow. A lot of people, thank you for the invite, a lot of people are going to be playing it cool for the night. So I think most of the volatility has occurred when Asia comes into the market at 2 a.m.-ish Eastern time. We may get some volatility because they may be trying to do a little bit of speculation going into tomorrow. And let me tell you, Asia moved the markets for the past few mornings. There's been a few 3 a.m. plays that are being caused by Asia. And it's very interesting. It's very interesting. So, how do we play this tonight? I'll be completely honest. I think that we're likely to see a small rally. But it depends on how much force is in the market, So for some reason, 3 a.m., there's been a lot of force coming into the market. Right now, Asia's already open. Sydney's already open. So Tokyo and Sydney are already open. But there hasn't been much movement. Oh, very cool, very cool. But I just wanted to give you guys a recap. So this is what I'm going to do, guys. For you 7 guys, oh yeah, it's going to be cool once you get into those classes. Accounting is probably going to be the one that you dislike the most because it's the most boring, in my opinion. It's like the most average. Still important, so you have to take it, but it's just not exciting in my point of view. All right, tear it up. Before you go, though, let me just say something, guys. So I've been doing a lot of thinking, and what I want to do is, for you 7 guys that are in this room right now, email me at info@fitbusinessman.com if you're interested in being one of the beta users, not beta testers. I've already tested the algorithm. Wow, 65 questions in 75 minutes, not bad. Yeah, the beta is already over. I've already tested, and the back testing is done, and the live testing is already been done. Education company until then. Well, I'm gonna most likely make something. Thanks, bud. What I'm gonna do is, though, listen to this. So, sum up Forex in one sentence. Beast mode. That's the summary. Beast mode. So there you have it in one word. How's that? What I'm going to do is, for you guys that are in this room right now, I'm going to make the alert system available to you guys before anybody else, before my email list, before anything, anyone else can actually get into the program. And so, if you guys are interested in that, email me at info@fitbusinessman.com. info@fitbusinessman.com. Jay is my first name. Jay. Alright, guys? So, that's my soft sell right there. If you guys are interested in, and basically the first people I'm going to actually give a little bit of help. I'm going to review your trading plan and kind of, make sure that you guys get set up properly with an account if you guys are ready to go live. And if not, set up with your paper trading account. We'll have a webinar. Yeah, for free. It's going to be free for a week. I'm going to give you guys a free week. And obviously, look, we took 120 pips out of the market. At this point, I'm hovering around the $97 a month range, which is affordable because people think, wow, $97 a month, that's a lot, but we would have made it back all in one day today. You know what I mean? We took 120 pips out of the market today on a 10,000 lot size. You would have made $120. Yeah, philanthropist. I know what you're talking about. And you see, the difference is this. The difference is the distinguishing factor between that program and my program is I don't believe in becoming a jack of all trades. Because there is a such thing, and I can tell you firsthand because I am an avid reader, there is a such thing as information overload. And it does not help you. It does not. Knowing more information is not more valuable. Being an expert, being the man, is what's valuable. I didn't see that first comment. Man, I really get upset when Periscope just fades out just a little too soon. You know what I mean? But my point being is that, I understand, the idea of that particular program, and it's gonna be okay for some people. I'm not in the program. I don't know exactly what's being offered, but I know any time that you offer too much, it dilutes how much time people can spend to try and become an expert. And that's part of the reason why right now I am only trading the Forex markets. That's where the volatility is, so that's where I'm becoming an expert. Yes, that too. Troy, I know. Yeah, there's not too many glitches, man. Yeah, philanthropist. I know which one you're talking about. Yeah, there's not any glitches that I see. The reversals are basically, you're losing 2 to 5 pips, and that's happened a few times today. But we walked away with 120 pips in total. So even if we walk away with 20 pips of losses because of reversals, we still net 100 pips, which is way more than I don't see anybody really making 100 pips consistently. Yeah, not, if you're trading a million lot size, we're talking about, with a million lot size, we're talking about making more money in 1 week than most people are making in an entire year. We're talking $100 a pip. Do the math, man. $100 a pip times 120 is $12,000 a day. You know what I mean? $12,000 a day. We're talking about 3.4-ish million dollars a year. Yeah. How do you think it is from 500 to 2,000 time frame wise? What do you mean in terms of what, daily return, or weekly return, or what? Or your total account equity? That's okay. Just reword the question. I'm not sure if you're talking about equity or net gains or what. Okay. So you want your equity. Well, I would recommend just taking, your 10,000 lot size. Don't go too big with anything. And we're talking making anywhere from 50 to maybe 150 a day. So let's just call it an average of 75. Okay? We're not, there's going to be some days that are twice that, and some days that are less than that. Yeah, that's essentially, the 500 account, you're going to be able to enter a lot size of 10,000, So basically you're talking $1 a pip. All right. So listen, this is what I would do. All right. I'm going to tell you something that you're not going to like. Don't trade tomorrow at all. Not at all. Okay, don't trade tomorrow. Clear your mind and find a book to study tomorrow about risk management, specifically with trading. Risk management and trading. Get a book on it. There's plenty on Amazon. And don't trade tomorrow. Yeah. Plus, when you're at a string of losses, you should be lowering your risk size anyways. All right, so maybe paper trade for the next week. Go back to paper trading and start. Are you keeping a trade journal? Because you want to protect your money, all right? And you guys got to understand. All right, so first of all, if you guys are not keeping trade journals, you need to start writing stuff down. Yeah. All right, so you got to see your trade journal as your autobiography for your trading. And you're going to refer back to it and glance at it every single day at the end of the trading day. And I tell people this, and I promise you, If you do this, your trading will get better, but I also promise you that 95% of the people don't do this. Okay, so good. Sit down with your stats. Look at a chart. I can guarantee you are making probably 2 to 3 mistakes with your entry in terms of risk or reward every single time. And you got to understand, guys, these markets are primed to take out stop losses. They are, okay? They have algorithms that determine where the stop losses are. So this is what I would do, all right? If you're in a situation where your account is dwindling, what that means, anytime your account dwindles, you need to be de-risking your lot sizes as your account dwindles. As your account increases over a certain period of time, you can start increasing your lot size. Does that make sense? Anytime you are having a string of losses, there's something wrong with the way that you're perceiving the market. Yeah. And so what'll happen is you'll start making entries based on momentum and not because you have a strategic low. I'm getting some movement here. And so what you want to do is start focusing on, let me just bring this on me for now. All right, because I want to tell you something as your so-called coach, all right? I want to tell you something as your so-called coach. When you are in a situation where you're winning, you may not realize why you're winning, but you're making the correct decisions. And to be honest with you, you're only going to know why if you do an analysis on your trading styles, all right? I'm going to bump up the light in here. So, email didn't go through, by the way. Email didn't go through? Should have went through. I'm not seeing anything. Info. Yeah, that didn't go through? What did it say? Delivery error. Well, I'm receiving email right now. That's stupid. Which account are you sending it from? Are you sending it from a business account that may be blacklisted? Alright, so your Gmail account should not be blacklisted. That's odd. Maybe it's something with my incoming server. Yeah, just give me your email. I'll send you a test email right now. Alright. We gotta get you a smaller email address, homie. You know what I mean? All right. All right, I just sent you an email. That's good. That's good. So, in terms of strategy, all right, let's say that you're losing all of a sudden. So, what you want to do is the first thing is you need to take a walk. You need to get yourself out of the market. You need to change your mind. You need to change your routine, your daily routine. So I would say this is look at your daily routine carefully. Look at your trade journal, okay? If you're not keeping a trade journal, you need to start keeping a trade journal. If you're not writing down your trades, in terms of what you thought psychologically when you took the trade. Start writing that down. You got to change it up. The only way to change the way that you're perceiving the market is to really change your schedule. So if that means waking up earlier, then do that. Wake up earlier, read, 1 or 2 currency articles just to get your mind working. Okay, I suggest reading early in the morning, or you could listen to something. I'm not telling you guys anything that I don't actually do. This is a book that I'm reading right now on my phone. It's 800 pages. It's on risk management. It's written by a guy who did risk management for 3 of the largest hedge funds in the world. And he's extremely intelligent. And guess what he said? It is called... Trading Risk, Enhanced Profitability Through Risk Control. Unfortunately, I can't see the author because it was a PDF that was converted to text, so the beginning of the book is a little screwed up with where the text is. But if you look that up, Trading Risk, Enhanced Profitability Through Risk Control. It's a heavy book, right? It's a lot of reading. But the point is that you got to stimulate your mind early in the morning, and you don't necessarily want to do it with something that's completely logical, okay? You don't have to get the math early in the morning. But get something that gets you thinking, okay? So make that part of your schedule. Maybe 1 article and, 5 pages of a book. Something like that. So 1 article, 5 pages of a book. I'll give you a quick jab at my routine. I'll eventually end up showing you guys on video. Trading Risk, Enhanced Profitability Through Risk Control. So Trading Risk dash Enhanced Profitability. I'm just going to I'll show it to you on Amazon. Yeah, okay, you got it? But, yeah, let me see how much this book is. The point is this. You want to get into a schedule that is going to allow... Yes. Yep. That's it. Kenneth Grant. Yeah, Kenneth Grant. And actually you can get it, someone's selling it for $2. $3, man. Yeah, Kenneth Grant. So, of course it looks like a shitty book. It's got a very average cover. But you see how the ratings are very high on it, right? It's not a heavy book in terms of calculations. At least I haven't gotten to that aspect yet. Okay, I got your email. But the point is if you go down and you read about the book, okay, you see who he used to work for. You just want to get into the mindset of being risk averse first thing in the morning, okay? That's number 1. Number 2, get yourself physically ready. So you have your mental prep, now you have your physical prep. Whether it's some stretching, rehydrating with water. And I'm going to give you guys, the guys that actually become members, I'm going to actually film my entire morning routine. So this way you guys know exactly what I take in terms of supplements, in terms of food, in terms of drink, whatever. You guys are going to know exactly what I do in the morning. Yeah, $6. I guarantee you it saves you more than that, right? The thing is will you actually finish it, right? You got to finish it. You got to apply the knowledge that's in there. So, in that book, he recommends if you have a losing streak, you need to walk away. You need to cancel your positions, go flat, Go on a fishing trip. Okay? Start reading books. Start writing. All right? Read and write. Get your mind into a different area. And you can start your studying, so this way you take a look at what you did. So you don't want to only study books that other people write. You want to look into your trade journal and study yourself. Become a scholar of your mistakes. Because if you know where you're making mistakes and you eliminate your mistakes, you are going to end up with only taking very risk-averse, high probability entries. Okay? And that's what it's about. It's about taking... Yeah, you know, the thing is this. If most traders don't necessarily have 1 to 3. I do not swing because the volatility is just too high right now, all right? You know, you can't swing trade when news stories are going to go 200 pips in either direction. Because you're actually losing your time value. Keep in mind, the higher frequency that you trade, the more you're honoring time value. Does that make sense? The more that you're honoring your trading ability and the fact that you can make repeated trades. Okay, so if you're going to trade a time series that only allows 5 to 10 pips, but you think that you can do that 100 times in a week, then you're not going to trade. You're not going to enter trades with the idea that making 9K on a 14K account is a good idea. Thank you for the share. Because it's not. It's not a good idea. It's nothing to get happy about. No, I'm just being honest. From a risk reward perspective, that basically taking that trade would not be good for your clients at all. That would be like you would get fired from your job if you worked at a fund with that type of risk. I'm being 100% honest. You would literally get fired from a fund if you put on that type of trade. So it doesn't impress like people that actually know how to trade because they know the math involved with that, and they know that at best that trade has a 50-50 chance. Right. Your best case scenario is 50-50 with that. Right, and that's how real traders win. That's how market makers win. That's how good poker players win. It's not by mistake. It's because they actually know how to control risk. Right. Right, and you have better probabilities in the markets than you do in the casino. But the point is this. The point is that when you know that your strategy is repeatable, you're okay accepting very, very small trades and very, very small risk. It's called absolute value, okay? So I personally know a guy who's a hedge fund manager, and he runs a fund of funds, and his criteria is basically whether the market is up or down, they try to take 3% a month every single month. That's very wise. That's very wise. You know, so, you know, the thing is this. If you know that you're doing poorly right now, you have to first understand that you can change that. That's the first thing, obviously. Self-awareness is the greatest business skill that you could ever have. If you know where you're at and you're not lying to yourself, that's the first step of making progress, right? But to know yourself, I will tell you this. If you're not keeping a trade journal, you're trying to keep all of your mistakes in your frontal cortex. That's called your working memory, okay? And that actually sabotages your subconscious thoughts. And it is also not possible, correct? Because once your working memory is full, guess what happens once your working memory is full? It's proven that people make stupid mistakes once they have too much on their mind. It's called I had too much on my mind, so I stepped out in front of a car because I didn't look. I forgot to look when I was crossing the street. I forgot to check that time series when I entered the trade. Yeah, and to be honest, I don't care where you keep it. It could be digital, it could be physical, and then you put it into digital at the end of the day, which is what I do. I write everything on Post-it notes, okay? So I write everything down because I got to jot things down quickly, but then at the end of the day, I go through it and I transfer it to digital, okay? So if you want to use that little tip, you can use that little tip. But the point is that if you're not a student of yourself, you'll keep making the same mistakes. And I promise you, you will keep making the same mistakes. I've seen it happen. I used to trade in a prop shop, right? Which was literally like the Wolf of Wall Street. Only in my case, it wasn't guys that were trying to sell, stocks to like chump investors. It was just a bunch of traders in the market, okay? But literally the same exact attitude. These guys would come in off the streets. Their dad gave them bar mitzvah money. I mean, I saw a guy blow through 15K in one day. One day, okay? and people think it doesn't happen. It happens. Hey, Andrea, how are you? It happens. So I seen a guy go through 15K in one day. Guess what? The next week he was in there with another 15K. He's basically feeding the market. Yeah, Andrea, I haven't seen you in a while. Great to see you. So, but would you believe that the same exact type trade that he lost the first 15 with, he did again and lost the next 15 with? And it's like, people like that can never become traders. They just can't because they don't have it up here. That, like, if you're going to airplane trade every time, you might as well play the lotto. That's essentially what you're doing. Same here, Andrea. So you need to have the discipline, first of all. You need to have the discipline to look at your flaws and put them under a microscope and not only look at them and understand your flaws, but now you got to have a counter, an actionable counter to every flaw. Okay? For instance, I will tell you one of my flaws when I started trading was calling tops. I tried to call a top for every single move in the market. When stochastics got overbought, I'd be like, this is the top. Boom, go short. All right? And I got skinned alive because guess what? I was always too early. Always. Always, always too early. Even if I said, I'm going to call the top here, and then I said, wait a second. I'm going to wait 15 minutes. And then I went in, I was still early. I was still over. Yeah, well, on the instances where there's a crossover and then another crossover, you get wiped out. Because what happens is you're not trading with the trend. If you're trying to call a top, you're not trading with the trend, right? So, same thing if you're trying to call the bottom. Unless you have an algorithm that is telling you there is a reversal happening, then don't try to call the top or bottom. All right? So that was my main mistake. Yes, the trend is your friend. When a price is trending, okay, and not so much now in the markets, there's very few trends that actually happen outside of intraday. Each day seems to have its own risk, and so the trend right now since last, if we go back to like last Thursday, price levels have been around the 140 level. No problem, Andre, you'll learn a lot. So essentially the 140 level has been, involved in prices for the last week pretty much, okay? We've been flat. We've had a lot of volatility in between those periods, but for the most part, Euro has been fairly flat for the last week. Here's the thing though. If you're trying to trade, on a trend, there is no trend there. We're trending sideways. So that's not a profitable strategy right now. You would have to find the trend within the intraday, which is not easy, okay? Intraday is ruled by a lot of hedge funds that do stat arb, okay, statistical arbitrage. And so the turns tend to be very rapid, very quick. You cannot get, any type of buy and hold strategy to work in that atmosphere. You just can't. Look at a chart of the last 10 years, S&P 500 inflation adjusted. We're at a double top right now. The last 10 years in the S&P 500, if you adjust it for inflation, there has been no net gain in the market. As a matter of fact, it's like negative 0.62%. So the S&P adjusted for inflation over the last 10 years is actually down 0.62% or something like that. Do you think buy and hold would work for the last 10 years? The only time it worked, no problem, philanthropist. The only time buy and hold worked is when we were either at the top or the bottom and you happened to get the right position. Yeah, I'll get your email back. So, point being, you need to have the strategy, look at the strategy, look at your notes, find out where you're making your mistakes, the repeatable mistakes, erase them by finding a strategy that keeps you from making the repeatable mistake. If you do that every single week, you will become a better trader, no matter what. Because most traders make the same mistakes over and over. They become creatures of habit, and the habits are going to be what makes you either successful or not successful. And they're hard to break, especially if you're not writing them down. If you're not writing them down, you'll think you're making progress, but in reality, if you were to be videotaping yourself from outside your body, you're going to be making the same mistakes day in and day out with the wrong trades. And it happens quite often. And the fact that it happens quite often is what gives the better traders the edge. Because there's always someone that's going to make a mistake. And the better traders take advantage of that. All right? So, tonight we've got, I don't know, not so great movement in the market. Very flat. And what I'm going to do is, all you guys that emailed me, info@fitbusinessman.com, I'm going to email you instructions for tomorrow. And I'm going to give you access to the alert system before anybody else, before I advertise it, before I send it out to my email list or any of that. Because I want to make sure that you guys get in. I'm probably only going to allow 100 people to be on the alerts because I don't want to be in a position where the customer service is so demanding that I can't actually trade or develop the product further, if that makes sense. The customer service has to scale as I scale, the business. I can't have so many people joining the alert system that if I get 20 emails per day, I can't even get through the list of emails to respond. I like to respond to all emails within 48 hours, so I hope you guys respect that. And as things scale, I will let more people into the program. However, I can't guarantee that I would not raise the price, okay? Just to let you guys know, if something is valuable, you have to make sure that you get the value for it. So if you have not emailed me, email me if you're interested in joining the program. It's going to be at least a 7-day free trial. And then from there, for anybody that joins, there's going to be a surprise on the order page, on the thank you page, that lets you know how you can actually get even more of a free trial. So anybody that dropped out and didn't hear that, I hope you guys are going through my scopes and going through the replays because that's one piece of information that you guys would want to know before you email me. If you guys help me, I'm going to help you. And one of the ways that I'm going to help you is I'm going to ensure that you go as long as possible without having to pay for the service and get as many pips under your belt and boost your account as much as possible before you actually get any money taken out for paying for a service. All right? Cool. And that just goes to illustrate it's very important early on that you receive some type of success in your trading career. Most people do not. I told you guys 95% of all Forex traders lose in the market, like straight across the board. And so if you still haven't lost, that's great. That's great. If you are on a good roll, then my job would be to keep you there, all right? My job would be to keep you there and to keep you focused, and that's exactly what's going to happen. Oh, you haven't seen success. That's okay. That's why I'm here, and that's why I'm making the system available on an alert basis, so you guys can actually get the alerts, take action on the trades, and follow along on the trades that I'm actually doing. So this way you guys don't have to worry about, is my analysis okay? Or, is what I learned in so-and-so's educational Forex class actually helping me to make money? You won't have to worry about any of that because you'll be getting the alerts instantly. All right? So I'm going to head off, guys. I got a lot of work to do tonight. And I'm going to be up early tomorrow morning. Hopefully I can make it up by 6 a.m. The moves tend to occur early in the morning. And I want to make sure that I'm ready for those moves. Okay? So get some great rest tonight. Today, again, we took out 120 pips from the market. It was a great day. Tomorrow, I want to do the same, and that's what our goal is going to be, just to hop on the moves as they come and be completely satisfied and content with the algorithm taking pips and not trying to force anything. Okay? I appreciate the invites. I appreciate the hearts. I appreciate all the shares and on Twitter. And you guys can reach out to me in the following ways. I'm active on pretty much every social network. So here's everywhere that you can find me. If you guys want to take a screenshot, Snapchat, Periscope, Instagram, Twitter, Blab. I'm most active on Periscope, Instagram, and I'm starting to get a little bit more active on Snapchat, but Periscope, Instagram, and Twitter are the main social networks that I'm active on. Replays can be seen on Periscope and on Catch. And if you want to reach out to me with a hashtag, I look at everybody who's using the hashtags FX Prime or PipKillers. All right, guys, have a great night. I will see you in the morning.